Good evening. Welcome to Harnessing Abilities, Rounding Up Resources. We are here tonight to talk special needs financial planning. We are excited to be able to welcome Joel Detweiler in to download everything he possibly knows about special needs planning in the next 45 minutes. So just going to plug in and let her rip, Joel.
Okay, that sounds good. All right, so I'm going to work on sharing. Let's go here. Share and how are we doing there?
Looks good.
We can see the whole screen? Okay.
Yes, sir.
Gotcha. So I have noticed with my computer, for whatever reason, it kicks out every once in a while. So if it gets fuzzy, don't be afraid to step in and let me know. Yeah, so I think we should be in good shape. So first off, thanks to Rose and Tim for asking me to speak. I like to speak and give presentations. I think it's a great way to get to meet people. And every presentation I give, I try and make sure that I'm giving something. Like I'll talk about it a little bit. I was a former football coach, college football coach for 15 years. And so I've spent my share of times in seminars and had people walk up that talked above me for a fair amount of the seminar, which I really didn't enjoy too much. I didn't like leaving feeling less intelligent than when I walked in. And so I like the opportunity to talk, to teach. I guess I taught for 15 years as a coach, and really hope that I can get people to understand. Now, sometimes that also means that I talk too much and I probably draw too much or have too many. I take things longer than they need to be. So if we get to that point, I got a thick skin from being a college football coach too. So don't worry about critiquing if something doesn't make sense. So with further ado, we'll get going. And first things first, I have to basically say that I'm not an attorney and I'm not an accountant. I am a financial planner. You guys can speed read that if you want to, but that's basically what that says. And I don't give any tax or legal advice. We aren't going to talk about investing tonight or anything like that. So we're pretty free and clear. But that's with that. I usually like to just have a little bit about me and my family. Unique thing about the Weissman Center, my wife, Kirsten, is a physical therapist. And she actually in college worked at the Weissman Center in her therapy days for, I think, 18 months or maybe even 2 years when she was there. So she thought that was cool that I was connecting with you guys. We have two daughters, Ava and Lily. They are at La Crosse School District. And basically kind of like my path, I grew up in Madison, Wisconsin, just south of Madison, I guess, in Oregon. Went to Wisconsin Platteville for graduate or for undergrad school, went to Madison. So I'm a Badger and a Pioneer. My claim to fame at Platteville is Bo Ryan gave me my first college A. So he was the old basketball coach at Wisconsin. I got an A in basketball class my first semester, which was my only A that semester. So, but I coached college football from 2000 to 2015. And then in 2015, football took us from Platteville to Waverly, Iowa to work at Wartburg College. Then it brought us to La Crosse. I was the head football coach at University of Wisconsin La Crosse for 5 years. And then in 2015, we decided as a family to football was cool, but time to get out. And so tried to combine recruiting, some math that I liked. We had a really good advisor back in the day. And so then we went into financial planning in 2015. And shortly after that, a lot of my volunteering that I did when I was a football coach with my daughters was in the disability community. And we really developed an understanding where it was, and what I think I'm most proud of with our girls and our family too, is that there's a lot of times, we're happy to talk to anybody and work with anybody. And there's really no, working with a child with disabilities to my daughters is no different than working with, someone who doesn't. I think that's one thing that I think that I'm proud of, that we are there to serve and work hard with people. And so I transitioned that as I was in financial planning. I found out after a couple of years that you can get a designation specifically for planning in the disability community. And it's a vastly underserved group. If I had to say, it's because it's dressed in blue jeans and looks like work. And so I think there's a fair number of advisors who don't do it. And I think probably as I was working through my designation and started to work in the disability community, I also had this sense of people would say, "Oh, good for you. Good for you. You're doing that. That's really good work." And it was kind of, I guess I almost felt like it was condescending to a certain degree. And so that kind of, I guess, galvanized my commitment to it, that I wanted to make sure I was there to be authentically helpful to the people in the community. I think that's, so it's very rewarding work to me. I get to meet all kinds of people that have disabilities. I work with people who don't as well too. I work with traditional families from a financial planning standpoint. My home base is Schmoker Financial Services up here in Onalaska. And then I have kind of, I guess, a sidecar, so to speak, or a side DBA, basically, is the Quantum Group, which is basically geared specifically towards special needs planning. So I'll do both traditional planning for families as well as special needs planning. So that's kind of the where we're at with that aspect of things. So first things first, I think when you're talking about special needs planning, I think one of the most important things for a family to understand is that the parents need to, and I guess I would say probably first off is that I know that there's all kinds of different families. There's modern families. There's all kinds of different, nuclear families, which seems like a weird word now, but mom, dad, and child. And there's also there's all kinds of different family structures, right? And so that's number one, is there's no normal case probably, or no traditional case when it comes right down to it. There's always something unique about each thing. Some of the stuff I'll talk about tonight too, there may be things that if you're listening, you might know better than me. And I want to make sure that that's something that if I could learn from you guys, or there's something I say that you have a different perspective on, please share that at some point in time. Because if I can learn it at one of my own presentations, that's cool. And I like to use pictures as an old coach. My favorite books that I've ever read were my daughter's children's books, because they have lots of pictures and not many words. So that's kind of one of my more favorite things. Self-deprecation is too, right? So, but basically, I think as I've gone through now and worked with families, one of the things that I think is probably one of the most important pieces of advice for special needs planning is the parents, the adults in the conversation or in the group need to take care of themselves first. And I've had this conversation with older adults with children who don't have a disability, who continue to maybe, I guess, empower their kids when they don't need to. It's like, the best way for you to take care of your family is for you to take care of yourself first. And so you can kind of like the analogy is being on a plane. It's like, get your mask on first, handle your business, make sure that you're maximizing. So if there's a mom and a dad, or just the parents, and they've got, make sure that you're maximizing your employee benefit package. Make sure that you're doing all those things for yourself first, and then work on the special needs planning. I think because if you try and put those two side by side, and you're not good at one, you're going to be bad at both. And that's kind of just from an experience, unofficial survey of the people that I work with. That's what we work hard at doing. And so when you look at the basis of, I'm going to try and move this thing. There we go. The basis of planning is really, again, pictures, organizing things, right? And so I started regardless of who the client is, I'll start out with this sheet of paper right here, and we just start to draw on it. And it's just kind of known as our bucket conversation. And so we qualify different areas. You're going to have a bank bucket, a retirement bucket, an investment bucket. We talk about tax planning, estate planning, risk management, and then we get a little bit deeper and we talk about all the little things that go with that. And I'm not going to spend a bunch of time on this tonight, but I think that this structure is a really great way to create a Spanglish where it's, I, as the advisor, can talk to the client who, the client has their world and I've got my world. And then in the between here, we can talk and get these and come to a place where we know what we're trying to get done. So we can get together and talk about a bank bucket, talk about cash flow, talk about things like that. This will apply in some way, shape, or form to special needs planning as well too. So if you have, we go through, I basically got, if you look at, I've got a podcast that I have, the Joel Detweiler podcast, as well as a YouTube channel where I've got a video up. I have a podcast and a video in regards to like this type of talk right here. So I won't spend too much time, like I said, tonight, but if you have interest, You can email me and I can send it to you, or you can go and check it out yourself. The idea is to have those things out there so that people can look at them themselves. If you never talk to me, that's great. If those things can help you and you get an understanding of how to organize your finances into those 6 areas and take care of yourself first, then we're in good shape. And then we got mission accomplished. So that's the basic part at the beginning. Then when we look at, kind of a, see if I can see it. The other part of it is, what is the timeline that you're working through, right? And I think that it's important to understand, again, it's another picture, right? So you've got a family here, and a traditional timeline, you go from birth, and the first big change is age 18, right? You could say 16, but really it's when they become an adult at age 18. So it's a different ball game when they hit that point, right? Which is what we're talking about a little bit tonight, but we're talking about traditional first, right? And the next thing, there's really nothing that goes on until short of, 21, but I mean, like, there's really nothing that goes on until age 65, assuming the parents retire then, right? And there's a little bit of things to pay attention to, but then probably you could go from age 18 in a traditional timeline to when your parents pass away. And that's when assets might come to the person who's in this example, right? And so it's, I wouldn't say uneventful, but there's really not too many big changes. 18 is the big one, and that's about it. When you look at a disability timeline, it can be quite a bit different, and more things are added. So if we talk about, birth to 3, right? That's an area that we talk about, Katie Beckett. We talk about different types of, benefits that you can receive for a child with a disability. Maybe the child hasn't been diagnosed prior to age 3, but that's definitely a timeline that you may encounter or you may have encountered. Next one is age 18. Age 18 is different for a disability timeline than it is for traditional, right? We're talking about transition. We're talking about government benefits. We're talking about Medicaid. All those things can happen there. When you get to the parents being of Social Security age later, and where this differs in its timeline too, is that, all of a sudden benefits for that person that started at age 18 can now transition and change, and that can cause a disruption. So that's another big piece that, you're changing this timeline from what it was before from the traditional standpoint. And then when you look at this last part, when the parents pass, wherever that is, that also is a bit different in terms of how do those assets pass? Who do they pass to? Are they going to be disruptive? Are they not? How does it apply to the person with the disability? So when we look at tonight, we won't cover all of those things, but tonight we're going to cover this spot of transition, which really I think is, when you talk about in the state of Wisconsin anyways, it's really transition begins about age 16. And then in terms of how you're working through it at the school, how you're working through services, things like that. And then it also really kind of in Wisconsin can push to age 21. Now there's definitely a transition that happens at age 18 that is going to happen regardless of what the school situation is. But 16 to 21 is kind of that spot where you're going to have, a fair amount of changes, services, so on and so forth. And it's unique to each person. It's unique to each school district. But that's really the area we're talking about right now. So one thing that I've tried to do with the experiences that I've had so far and the families that I've worked with is try and create, a disability bucket diagram similar to the first one I showed, and have it be, what are these areas that we need to talk about? What are the areas we need to plan around? What's going to happen here? And it's financial planning, but it's more than that. It's somewhat having an understanding. And I guess it's why I've had, why I work with people and people call me is I can help in a non-emotional standpoint. It's I think what a lot of times when you have your child involved and you're working as well, and you've got multiple things going on, talking to Social Security and waiting for half an hour on the phone to talk to them and maybe talk to somebody who's rude really isn't that much fun. That's not a good experience. So I've gone through and tried to say, hey, here's some things that you can expect. Here's some things that, this is where you really want to pay attention. Or this is where you can maybe wait a little bit, or, things like that. And there's choices around every corner. And I think that one of the parents that I worked with, or I met probably about 12 months ago, had it pretty good, where she said, you're kind of a pinball at the beginning, when you start making phone calls, you get pinballed all around. No, we don't do that. Call this group. No, we don't do that. Call this number. Call the Western Consortium. No, call Inclusa. No, call the county. And so you get pinballed around when you're looking for an answer. And then it seems to transition once you have some of these buckets taken care of to this just avalanche of things. And so you're snowballing. And so even I've noticed you get newsletters and they've got 15 or 16 different links to click on, and there's just massive amounts of information that get flooded to you. And so it's kind of like pinball to snowball was kind of the verbiage that she used, and it hit home for me. So I'm hoping not to make it, I'm not going to give too many links. We'll talk about some basics. I'm hoping not to flood you with too much information, but we'll talk about this, this group of things kind of in order of importance. Each one of these bubbles, I think, and then we'll go from there. So getting going, when we talk about, one of the areas can be a hot button topic, guardianship, and what you do really doesn't make a difference to me, right? It can be shared decision-making. You can be the guardian of your child. That's a big decision. That's a family decision. And that's a whole nother presentation, right? But I think what's important from a financial planning standpoint there is it's important to know, regardless of what you do, is who's the decider. Is it the child? Are they a self-advocate? Or, is it the parent, where the child probably will never be a self-advocate, so that, you've got on each side of the spectrum in terms of what you're doing from a guardianship standpoint. It's important to understand who's making decisions financially, who is setting up, bank accounts, whose name's on the bank account, right? Who has signing power, right? Who's responsible for the money? Those are important things to understand. And so I think that's a big part of the financial planning. It's no different when you're in a family and you're trying to decide who's paying the bills and who's not. Like in our family, it's fluctuated back and forth. But right now, I guess I'm in financial planning, so I take care of writing the checks, right? So money comes in, I write the checks, I converse with my wife about it and explain it, but I'm the decider in terms of when the bills get paid. I'm also responsible for when the bills get paid as well too. So that's kind of the financial planning that surrounds the guardianship decision, right? So it's not meant to be to create debate as to what you should do. It's like, well, if for whatever you're doing, make sure that you understand who's responsible for what. So you can look at, one of my guardianship conversations that I've had before too, you've got the child, you've got the parent who's the guardian. And if you're the guardian, you've got multiple possible roles, right? You may be a guardian of your child, in this case, where you have to go to the judge and get that approved, right? You might be what's called the rep payee, which we'll talk about in a second as well too. In that case, you don't go to the judge, or the county, you go to Social Security to work on that. If you have a special needs trust, which we'll cover later as well too, and then the parent might be the trustee. So the parent could be the guardian, the rep payee, and the trustee of the trust all at the same time, right? And just completely umbrella the child, which is great. Okay. And so that's a possible setup. Doesn't mean it's right for everybody, but that's a potential solution right there. Okay. You also could look at it and say, well, we've got all three roles again. And let's say the child is a self-advocate, right? Well, we don't need a guardian. And let's say that the child let's say there's not funds to put into a special needs trust. So we don't have that. So maybe the parent just simply acts as the rep payee, or you could put an X through that too, and the child can handle themselves, right? And can do that. So I think that is, again, what is the role? What role does the parent play? And it's not final. If you start out with shared decision making, you need to take over guardianship. Those certain things get more difficult. And that's that whole discussion as well too. But it's important to just have those discussions and understand what are my roles going to be here, and define those roles. That's one of the more important things about financial planning in any situation. Next area or bucket is going to be your federal government benefits. And, if you qualify, and I think a lot of families that work through this process, there's a lot of frustration with understanding of how things work. A lot of frustration with maybe even personalities that work at Social Security. Sometimes they're great situations, sometimes they're not. A lot of service providers that I've worked with, both at Social Security, Western Consortium, I think that one of the pressures they have is to make a decision and give a definitive answer. And there isn't always a definitive answer. And I think that they also have to be careful, right? That they don't give out bad advice as well too. So, and I think, and that frustrates people. So, and I understand both sides. Absolutely. So, number one is when you call Social Security, I guess if they're unprofessional, that's one thing, but maybe give them some grace. And, I try and kill people with kindness when I make phone calls to try and get things accomplished. But one of the big government benefits you're going to have in transition is more than likely going to be Social Security income, or SSI. And it's really meant as a benefit to be for food and housing, or they say eats and sheets, as whatever way you want to talk about it. And that's what it's meant for, is to provide a benefit for those things, or for the person to pay for those things. You have different ways, different times, and you can apply. If you have a child, you may have experienced this. If they're under 18, you're going to be, the household is going to be included. So the household income, household assets, everything. And as a family, to receive SSI for a child, you have to be essentially, impoverished, right? I mean, it's really a tough situation to qualify a family when it's before age 18. Okay. Now, the big transition there is when that child becomes 18, it's based on them as an individual. So that's a definite game change, that right away, that someone who maybe had no ability to qualify before age 18 now can qualify afterwards, right? And again, I won't get too much into this, but it's basically, you should be applying for government benefits regardless of once the child is 18 in transition, you should be applying for those benefits regardless of what your family's financial situation is. If nothing else, to be qualified, to have a qualified disability registered with Social Security. One thing to understand about Social Security income and SSI is that, it will decrease with income. We'll talk about jobs in a little bit here, and it's going to, it's not the money you make is not, if it's in the SSI situation, it's a sliding scale. So if your child makes money, once they're on SSI, they will lose, if they make it, it's not quite dollar for dollar, but it's close enough. If they receive $800 and they make $100, you can be pretty sure it's going to be close to $700 they'll get instead of the 800. And if they make 800 a month, then they'll probably get nothing. And so that's something to understand, that there's a benefit there, but there is a hook there. And I think that's sometimes a shock to people when it comes to that aspect of things.
So Joel, got a quick question for you here.
Yep.
Don't know how much you know about the SSI application process, but we have someone who's wondering that if when the 18-year-old applies for SSI on their own, is it worth hiring an attorney to be part of that process right away? They've heard that rejection 3 to 4 times is common before SSI will approve.
I guess I've got 2 answers. One, many of the clients that I've encountered already have SSI. So that's maybe to qualify my answer, but I believe that there is a little bit of a confusion. So we look at the bottom there, we've got SSDI, right? SSDI is one that's very difficult to qualify for. I don't know that SSI is, I guess that would be, I don't have a lot of experience with that. My gut tells me that it's not as difficult to qualify for Social Security income for SSI if you have a qualified disability as a child coming out, right? Or coming out of being a minor, I guess we could say. I do think that there is a benefit. One of the best things about about hiring an attorney, I have lots of attorney friends, so I won't rip on them too much, but one of the best things about Social Security and applying for it and having an attorney help you is that the pay structure for that type of case is they are only paid if they garner a portion of the fee. Usually what happens is you don't have it, you get it backdated, and you get a lump sum for the back date that you were supposed to have it. So let's say that you get a $5,000 lump sum, the attorney gets paid as a percentage of that lump sum that's gathered. And so you're not paying up front. So number one, I would say that SSI, I don't think is as difficult to qualify for as SSDI. So SSDI in its natural sense is you have to basically, I would have to work and establish a work record, or whoever it happens to be. So usually SSDI is not usually taken until later in life. And it's either based upon, as a disabled child, it's based upon parents' work record or even your own work record. And so usually it's more difficult to qualify for SSDI. So I think, Tim, that's what we're talking about. It's almost kind of like just a myth, maybe. You know, I hesitate to say that, but I think that's kind of the SSDI piece is a more difficult than the SSI, but that's me saying that without actually having applied for it either. So
would it be good
and-
for me to clarify here, or do we want to wait until the end?
go
of the
ahead. Yeah.
Okay, yeah, just so you can have context for
Yep.
future parts of your talk too.
Yep.
So we have a 16-year-old right now who is turning 17 this month, and she was just now diagnosed with a number of things that we believe are going to qualify her for county services.
Yep.
So that when we call them and explain that we have a disabled child, and they ask the questions, what is her IQ and what are her diagnoses, we will have something that will be helpful to tell them. So in pursuing that this next year, she has not been able to be diagnosed before now. We just didn't have the right people looking at it.
Yep.
She didn't have that during childhood. So I think it is SSI that we are going to be pursuing in
Yes.
the coming
Yes.
year.
Yep.
And we had been told that an attorney would be helpful, just because maybe it can limit the amount of times that you have to apply and appeal, if you have somebody supporting you initially.
Tell you what, let me do some research on that after this, and I can do that. I can do it later I can do it tomorrow, the next day, but I'm really curious now that you've asked that question, because I've not had that before. So
Thanks, Joel.
yeah, for sure. So I don't have a good answer for you, I guess, like off the hoof, but I think that let me work on that for sure. And I can reach back out to you via Tim and let you know what's going on. Yeah, good question. Really good question. So see, make sure that we cover that. But like, so Vonna, to answer your question, definitely SSI would be what you'd be applying for, because technically your daughter would not qualify unless she's worked, right? Or unless you would have to be age 62 and eligible for Social Security for SSDI to come into the picture, so to speak, if that makes sense. So definitely it's SSDI. Then the question is, what does it warrant hiring an attorney? And I've got a good disability attorney that I work with that I will ask that question tomorrow, and we will find out. So, so then next bucket. Tim, are there more questions there at all or no?
No, just Vonda would like a follow-up. If anybody knows good people, good attorneys who work with this, that'd be great to have some recommendations. I, of course, cannot recommend, but offline, if you guys could connect, that would be great. Also, just general, Joel, while we're at an interruption, just wondering if you're going to be if you're able to work with people online or in person for like people that don't live close to La Crosse, if they would be able to get in touch with you.
I've got clients, without sounding crazy, like I've got clients kind of all over the place. I've got clients in Colorado. I've got clients in Wisconsin, Monroe, Wisconsin. My parents live in Mahorn, Wisconsin, so I'm lucky enough to be their planner. I've got clients in Milwaukee, Eau Claire. So I travel quite a bit. I think I've put on maybe, 15,000 miles this year. I like getting around and seeing people and helping and that kind of thing. Maybe that comes from my recruiting days where I drove a lot, but I think I'm happy to go. I've got clients in Rochester, Minnesota. So it's not a battle to me, or it doesn't make no difference to me if it doesn't bother anybody from that standpoint. So we can get Zoom. Actually, the Zoom coming around in COVID probably has helped, like the remote aspect of that quite a bit. So, so yeah, good question too. So the next bucket is, and this is a big bucket too. This is very similar to guardianship conversations. Okay. And so this is something where you want to, I won't get into it. This is probably the area where maybe I would say I'm weakest in my planning. but I have people that I reach to, just like I have a booklet of attorneys that I call with questions from estate planning to special needs planning. I also have a group of people that I call and I meet with every month in regards to service providers. So you hear things like, Inclusa, Iris, My Choice Wisconsin, TMG, Aptiv, there's all kinds of providers, right? And they each have their own way of doing things. I'm slowly getting the Rubik's Cube figured out, I think. But it's important to understand how those things work for your child, right? Number one, though, is, and if your child's like in Vonda's case, like age 16, you could more than likely have her daughter's care from an insurance standpoint come from the family, like the employer, right? So if you have an employer, my wife works for a clinic as a PT, we use their insurance. If our child had a disability, it's no different than any other child. You can keep them on your plan until age 26, right? Now you may, and I think it's recommended that you would apply for Medicaid. You may not necessarily need it, but you could qualify the child for Medicaid at age 18, and then Medicaid could be in the mix, so to speak. So if you have a deductible that is $5,000, Medicaid can kick in there at some point in time. How all those rules work, I'm not an expert at, but I do know that there's layers of care. We have veteran families that have TRICARE. They have another veteran benefit for healthcare, and then Medicaid kicks in at the very end, right? And so there really isn't a reason for you to spend, that the child should still be able to use Medicaid regardless of what capacity it is. It's just making sure that you understand that. Age 26, obviously, is when traditional children will come off the plan, but the employer can also be notified, and you can also keep a disabled child after age 26 on the plan. I don't believe it's a law. I think it's more of a thing you work out with the employer, but it is something, your child's turning 26. They have a qualified disability. They're on SSI and have Medicaid. Absolutely ask that question, because I think most employers, want to try and help provide that benefit depending upon who they are, of course. So when we get to the services, so that's the healthcare portion, right? When you get to the services portion, which, again, it depends upon the disability, depends upon the services available, but this is where Medicaid might kick in and say, a lot of it from what I'm experiencing so far is like, do you want to be self-directed as a family or as an individual, or do you want to have a service that you hire, right? That helps provide and direct services and so on and so forth. When you do with the service, there's a fee for that, right? That's why they're in business, right? So they're going to get a fair amount of the Medicaid funds, and then they're going to direct services, but then they also will keep some of those funds for themselves. That's how they're profitable as a company. And that's just the way it is, right? I think that's something to understand too. It's not emotional. It's just like, hey, if we're going to hire them, you pay them for their services. And so I guess it's kind of like the idea of, as I've deduced it, it's like an a la carte versus all inclusive type concept, right? And neither is wrong, and you can switch back and forth between the two. And it's important to understand that. And some people switch because they don't like their caseworker. I've seen that. And some people switch because it's better for them as they've transitioned as a family. Maybe the parents have retired, so on and so forth, and now have lost healthcare, for example. So this is a place where I go get people that know about more than me. This is where I go get help, really. I think I help people with this and talk through and make phone calls and ask questions, but I also am not an expert here as well. But it's definitely an area that is important from that standpoint. Along with that, you've got housing, kind of another approach that you can have. Again, another personal choice. So like in Vonda's case, if her daughter lives at home and receives SSI, then technically she could charge her daughter rent, right? And that is, Vonda would then take on that rental income on her taxes, but that would also be a way for her daughter to not accumulate assets over a long period of time, which we'll talk about in a minute. That is why that's important as well too. So, so living at home could have them pay rent to the family. That'd be a family cash flow situation. You can then spend it, store that money for them as well too. But it would be in the parent's name versus the child's name, which is pretty important, as we'll see. So other ways you look at, which is almost more of kind of the all-inclusive type of arrangement, does your child qualify to be in an adult home or a group home? Down in Verona, I know that there's a I think there's a condo complex, I believe, that was built specifically for children with autism and kind of almost group home setting. We have a good friend that was the architect on that. So it's kind of a neat situation. But it's also understanding then, if you make the decision to go to the group home or the adult home, you are hiring other people and they are in a business to, not be ultra rich, but to make money. And so that portions of the funds that would normally go to your child will go to those services. And you have to decide if that's the benefit that you want. So, and they'll be paying rent. We just talked to a client up in northern Wisconsin where the son is 19, stays in an adult home, basically is taken care of from a care standpoint, food standpoint, everything is pretty much taken care of. He pays rent with SSI, and his Medicaid also helps pay for some of the services. He probably nets about $50 a month total for savings, but has no needs really, and so that's the give and take. And so that's the understanding there. Again, that's specific to each family. So when you look at it, it's kind of like, I got the stick figure person here, but if you talk about the beneficiary, what are the benefits they can start to receive, right? So SSI, room and board, right? How you pay for that, like income can affect that, right? More income equals less SSI for that child or for that beneficiary. It's also, it may go to rent somewhere, right? And food, do it yourself or hire someone to do it for you. Healthcare, Medicaid, same concept. Again, very general, but also I think just important to understand, like, well, what's the healthcare situation? Are they on their own? So on and so forth. So next one is personal banking. I think this one's probably like where the biggest portion comes in is, again, who is the decider, right? Who's on the accounts? You can have a self-advocate, but you can also be on there as a parent. What's a debit card situation look like? Do you want to give a debit card to the child, right? Or do you want one for yourself for ease of purchasing things for your child, right? So it's whatever system works best for you, not for what your neighbor might tell you they're doing, okay? It's also access and monitoring, making sure that you don't have too many assets, making sure that money you're spent on allowable expenses is done correctly. And sometimes it's less about your child and more about your trust of other people, right? If you have your child likes to go to, we have a client whose child likes to go to Quick Trip. They walk the dogs every day. They have a debit card, but they only have a certain amount of money. And he was actually fooled into, buying a 6-pack of beer for a girl that was cute, that was talking to him, and I think it's kind of like that was a situation where he was taken advantage of, perhaps, right? And that's all things to think about. It's what layer, and again, that comes into the guardianship conversation. What layer do you want to have there, right? There's a thing called the rep payee, which we talked about. So rep payee basically is the financial, kind of the equivalent of financial power of attorney, where you're in charge of all things financial for your child. And that's a decision that you can have a service do that. You can manage it yourself. A lot of times, if younger parents will do that with their child, when they get to be of retirement age and they start to sunset and transition out, if they don't have an heir apparent, there's rep payee services that can do that as well too. Or there's self-advocates that have trouble saving money and managing their money. They hire a rep payee to do it for them. And that rep payee is then responsible for asset limits. One important thing to understand, if you're on SSI and if you're on Medicaid, as a baseline, you are going to have a $2,000 asset limit. So any accounts that you have, or any accounts cumulatively, cannot add up to more than $2,000 cash. So checking, savings, so on and so forth, those cannot add up to more than $2,000. They'd be a countable asset. And if you exceed that amount, you have a certain period of time to spend that money down or transition that money somewhere else to a non-countable asset, or you will lose those benefits. And that's important to understand. So really the big number to understand when it comes right down to it is $2,000. If you're on SSI, you're on Medicaid.
Joel.
Yep.
Hey, so speaking of that $2,000 asset limit, does that include any savings bonds or any like Christmas gifts a grandparent might gift to somebody, or like, we're in the agriculture world and there is gifting of some type of piece of equipment or something that's a family heirloom? does all of that have to be reported as possible income towards that 2,000?
Good question. Anybody from the IRS on the call? Or Social Security? Cash, obviously, that's in an envelope in the house. No, I mean that you don't have to. That's sometimes how you do it. I wouldn't recommend that necessarily, but I think when it comes to things that anything, I guess that the idea is that anything that can be sold and or liquidated, right, and turned into cash, where it's like your example with like an heirloom of a, let's say it's a family vehicle, right? If that they come in, there's with Medicaid, and this is probably my lack of experience a little bit, because it's not a lot different than when someone is going into a long-term care situation, right? There's a set of rules and a certain number of things that you can have access to. You can have your house, you can have one vehicle. There's a laundry list of things that you can have. Anything above and beyond that, and really anything that can be liquidated, is going to be considered a countable asset. And that's where you want to make sure that that's where you don't want to have ownership of things if at all possible. So I guess that's kind of one of those it depends kind of answers, if that makes sense, Rose. That's where you want to dig into the details, and like, you know, savings bonds in their names is a countable asset, certainly. If they have, you know, probably the thing where it gets the most dicey in an inheritance standpoint is if grandma and grandpa put the child as a beneficiary on a life insurance policy, and all of a sudden they've got a $50,000 death benefit with their name on it. There's ways to work around that. You don't have a lot of time to do it, but there's ways to work on that as a solution. It's not a, you know, final thing, but you know, if you don't get to work pretty quickly on a $50,000 death benefit check, you're going to have yourself a problem, basically. And there's, without getting too crazy into, I know how to somewhat solve those problems, but you also have to have some agreeable parties as well too, and you need to have some things in place, basically. So I'm not sure if that answers your question very well, but that's kind of the basic idea, right? So SSI, Medicaid, we're back to our bubbles here. You know, if we have those two things, then we also bring along with it a hook, right? No different than, you know, Roth IRAs are great things for financial planning, but they only let you put in so much because it's such a good deal, right? Everything's got a hook to it that if it's got something that's good. So that's kind of the bucket areas that I think that are going to be in transition. There's more to it, right? I mean, there's always something more going on, but those are the areas that, you know, very first thing I think, like, so for example, like Vonda, one of the first things that you should have as a discussion between now and age 18 is what's going to be the guardianship situation, right? And have that in play. That's where you want to for sure have an attorney to help you with that if you are going to try and have guardianship of your child, right? If you're not, then you don't have to. But
Yeah, looking at supported decision-making for us.
yep. And that's great,
Sorry.
right? And if it is, then that's great. And then you kind of, that sets your bar, that sets your flow chart, right? Where it's like, okay, well, now we're going to start looking at the rest of the stuff. So if you have supported decision-making, then it's, how's our bank account going to be set up, right? How are we going to monitor what's going on, right? Or, you know, to what degree? And that's a conversation between you and your daughter and your family. And that's 100% you, right? There's, that's the idea of not listening to your neighbors all the time, right? Because their deal might be completely different than yours, right? Your neighbor always has really good stock tips too. It's like, you know, Bitcoin, all kinds of stuff, right? So, so that's those areas that I think are important. I touched on the surface of a couple of them, and I guess for the, you know, those are, I have referral sources for all of those things. If I don't know, I like to help people and get those and get people in front of the right people that I've worked, that I trust, that I call to get answers that will help me. Right. And that's part of having a network when it comes down to it. So then we talk about, all right, well, what tools do we have, right? How do these things change? So you can see the different areas: employment, asset management, case design, you know, what happens, how does the estate plan work, and what happens when you're gone as a parent, okay? Which are all important. Those are important facets of financial plan as well too. And some of it is, how do we handle right now? And then some of it is, how do we handle a crisis? Do we have a plan in place? If, you know, is there a plan in place for the Detweiler children should Joel and Kirsten go out in the pontoon boat and not come home, right? Tomorrow, right? And then there's also, well, what's that look like long-term if we're able to accrue assets and we retire at age 70 and we both pass away at 72? Well, how is that different than the crisis plan right now? So the long-term plan is a workable thing over a long period of time. And the crisis management is what you want. And you want to have stuff in place for both when it comes down to it. So, so as we look at one of the first ones, employee benefits or employment benefits, right? Your child wants to work. That's great, right? There's workforce development groups that are out there that, you know, ILR, workforce development, workforce connections, where they want to help train people. They want to help people get employment. There's jobs available, right? So how do you help someone? Like we've got clients whose kids work at Culver's. They work at Quick Trip in town. Some probably could eventually have full-time jobs and maybe even be off benefits when it comes down to it. So that's number one, is workforce development. And how do you know, or maybe it's even education too, right? I mean, that's for sure. You want to make sure you don't limit, like, well, they're not going to go to school. Well, that's not a phrase we're going to use, right? I mean, that's, you know, it's like, we're not here to limit what they do. We're here to help them. And so could be workforce development if they're in college, right? That's a different situation. Or if they're in tech school or whatever it is. Those are important things to understand. I probably should have that in there. I left that out. But bottom line is you start to make income, right? We talked about SSI goes down with income. If you are on SSDI, okay, SSDI does not reduce with income each month. You get the same check every month, but that's very similar. SSDI runs the same rules as normal Social Security for a 62-year-old. You're allowed to make X number of dollars and still maintain your benefits. If you make too much, you're going to have to pay it back. So they won't do month to month, and they won't do reporting. They won't take less or take more away from you each month, but they're going to track the whole thing. And when you file your taxes, if you make too much money, you're going to pay your benefits back. So there's a give and a take there. One of the benefits that comes in Wisconsin with having a disability and being on SSI and Medicaid and being in that system and having all those things set from those first portions we talked about is there's a program called the MAP program that if you are, and it's not automatic qualification, but a lot of people that I know that I work with that work are on what's called the MAP program, which is the Medical Assistance Premium Payment Program. And what that does is essentially participants who qualify pay into the system. And maybe you think of it as kind of a Medicare supplement type of scenario, right? Where their premium is based upon their income. So if they make a decent amount of money, then they'll pay a little bit of premium. If they make money, but not enough, then they won't pay anything, but they'll still be part of the program. So it's a subsidy program. And what that does is it helps to pay for their Medicaid. And they're paying in, so to speak, or they're becoming part of the solution from a premium standpoint. That changes the game from an asset limit. That $2,000 asset limit now, whatever that number multiplied by 7-ish times, right? You've got a $15,000 asset limit versus the $2,000 asset limit. You've got a lot more room. It's a lot easier to save money. And that's a good reason from an income standpoint. I've even seen people who have qualified, they don't have a job that pays income, but they work and they volunteer. And so then they qualify. So we have a 65-year-old that volunteers at the Restore in town, and he's on the MAP program, and it has a $15,000 limit. And as long as he keeps volunteering, he'll still have that for probably the remainder of his life. And so that's a big, big difference between 15 and 2, right? And that's, we've actually had to use that because some of his assets have become countable recently, and he had quite a bit of money, and the $15,000 limit gave us a better buffer than 2 when it came down to it. So that's something to consider and understand. It's first get qualified, first get yourself where you have the $2,000 limit, and then work on the next thing of let's get a job, let's work on the next thing, and then let's qualify for the MAP program as well too. So that's a benefit of employment, right? A couple things that are pitfalls that I've seen as well too, that's part of planning. Employer retirement accounts. So if you are at Culver's and you participate in their 401k because you have enough hours, technically Culver's is sometimes, whether you're saving money or not as an employee, the company will put in regardless, right? So if your child's working, that's why it's important to understand your own 401k or have someone help you with that, so that when your child's working and they're doing in that situation, we're able to make sure that we know, is there money going in? And one of the things that I've learned about the asset limit, so let's say you're on a $2,000 asset limit. We had a client that had $12,000 in a 401k. Caseworker wanted to count the 401k dollars. In that particular case, we went through a bunch of stuff and a bunch of reading with the consortium and everything else, and it was determined that a 401k that is with Culver's for an employee who works for Culver's, that 401k is not countable against assets it's not a countable asset. But as soon as that client leaves Culver's and is no longer employed by Culver's, that money is now accessible and is countable. So that's kind of an interesting caveat. So you don't want to give away, you don't want to not take money, but it's important to understand the rules of, if your child works someplace and they qualify for retirement and a company match, free money, it's okay to take it, but you need to understand, if they ever leave, you're going to have some workaround that you have to work on. You have some things you have to work on, and you may have to spend assets, and I'll show you a tool that we can use, but it's just a game that you have to understand that you may have to play. So basically there's a shell game in the waiting that you're going to need to make sure that you have. Other things that have been pitfalls too, year-end bonus, hey, we want to give you a bonus, did a good job this year. So kind of like to, when you look at, I guess, like Rose's question, like all of a sudden a bonus shows up that you didn't expect at Christmas time, where you got a pretty good feel of, okay, we got $2,000, we got, 1,500 comes in, we're going to spend this, and you got everything's fine tuned. And all of a sudden a $1,200 bonus shows up. That's a pretty big, that's a change. You don't want to lose your SSI at Christmas because you weren't paying attention, right? Or because your employer just like wanted to do something good, but also kind of did something bad. So those are some experiences that we've had in the past. It's definitely worth fighting on those things, and fighting with sounds bad, like working with the consortium and making sure that you can maneuver money. And even if you pay a fine or pay a penalty on retirement dollars to maneuver it, so you don't have to spend all of it, that's still an okay opportunity cost as well too. So just some experiences that we've had. So one big tool that we can use that is, as I've been alluding to a little bit, you've basically got some estate planning and some, what kind of accounts, like what's there for us, right? And I've given a presentation on this before, and so I will talk at about a 10,000 foot level. If you want to go to our podcast and listen to the Able Account one, or if you want to go to if you go to YouTube, or if you just type in on Google Quantum Group Planners YouTube, you'll get the station, and I have a presentation on Able accounts that's there as well too. And what they are is, they're new as of 2014. It's an account that is very similar to that structurally as an HSA or a 529, where you can put in, for sure, everyone can put in $15,000 into the account and you have to qualify for the account. And so you have to have a qualified disability that's been diagnosed prior to age 26. And you actually have to have that qualified disability. Those are kind of the two big things, right? If you have those two, and if we're talking about a child in transition, then obviously I would like to think that everybody's pretty much qualifies for this conversation. The assets are not countable. It's a federal program. You can put in $15,000 a year. The child can put in if they're working. Mom and dad can put in. Grandma and grandpa can put in. Guy walking down the street can put in. So there's no limit as to who can put in. Taxable dollars are put in. So it's like a Roth IRA in that sense. There is not a tax break to put money in right now. You can grow your assets and invest inside of Able accounts if you want to. If the child is working, they can put in work dollars that would actually raise the amount to $26,000 that you can put in. So 15 by itself. If you work, you can add up to another 26. There's tax-free growth, and the distribution is tax-free. So it's very similar to a Roth IRA structurally. You can grow that. I think the max amount is somewhere around $300,000 to $400,000, depending upon which program you use. And you can't backdate. That's one thing.
Right.
You can't, other nuances that are there. If you start to exceed $100,000 in the balance, your SSI will be suspended. But as soon as you go back down, it'll be reinstated. It's not taken away. It's just suspended or paused. And I would say it's awfully hard to exceed $100,000 at 15 grand a year. I mean, if you started one today, so Able account started in 2014, 7 years times 15,000. I doubt if there's many Able accounts out there that are even in excess of $100,000 in existence. And so you're going to see that big number coming when it comes right down to it. So it's not a reason to not do it, if that makes sense.
Hey, Joel, a couple of questions. Number one is we are right up against the time.
Yep.
And so what I'm thinking is we're going to need to, I can get together with Rose and talk about what the slides that we're not going to be able to get to.
Yep.
Possibly looking at doing something on special needs trusts in like 2022.
Yeah, for
but
sure.
I am curious because I've also heard that could you explain a little bit more about that $15,000 limit? Because I thought they just were not able to receive more than $15,000 per year. Like if everybody's putting it in.
Yep.
I've been told that limit is like $15,000. You're not going above that 15,000.
For sure. There's an easy caveat for the time frame. I'm actually going to be doing if people are interested in my couple of special needs trust slides, I'm going to do a presentation tomorrow night. Coincidentally, I'm doing one like on, I can share that if people want that, we can send that link out if you want. And that's a whole hour of special needs trust if you really want to listen. So, so that's easy. But the $15,000. So if it's everybody who opens an Able account is eligible to put in 15,000. It's very similar to a 529 account. Now, let's say I open an Able account. I'm not working. I'm limited to 15,000. If I start to work, I guess the example would be, let's say that my parents are maxing out my Able account for me. So they're writing a check for $15,000 and they're maxing it out. But I start to work a job. Well, as soon as you start to work a job, you open up the extra, I guess, $11,000 ish. I think it's about 11 or 12. So 26,000 is not quite accurate, but essentially, if you start to work, there's a lever that opens, and when you contribute to an Able account, it'll ask you, is this a work donation or a work contribution or a regular contribution? So me not working and maxing it out, I get to 15. If I start to work, that opens up that I can make an additional $11,000 in this example. I can make an additional $11,000 contribution based off, but I have to go make that much money, right? So my taxes have to show $11,000 that I made in order to put in the extra money on top of the 15. So I have to prove it at the end of the year when it comes to tax time.
Thank you.
Does that make sense to you?
Yep.
Okay.
Yep, very much so. And I also put a link from the Able Now people that can explain that as well.
Yep, for sure. And there's a lot of good stuff on Able accounts. And I guess I'd encourage people, if one, you can call me for sure, but two, the video I did, that's about a half hour that you can watch with the podcast and listen to it. I think I did a better job I did tonight explaining it. So.
We all have those nights. No worries, Joel. So I would like to thank you. I'm going to stop the recording in a moment so we can get that posted. But if you could just hang for a couple moments, if anybody has any other questions, are you able to hang and answer them?
Yep, I got all kinds of time for sure.
Okay, so we will look at picking up our financial needs planning, which is obviously a huge topic. Tonight we learned about what we could do now to start looking ahead to the future, taking care of our own finances, looking at who's going to be the decision maker. And then we started getting into some of the tools and ran out of time. So we will be back to look at more of the tools that are available for savings and for, what happens, if I decide that I don't want to live forever, what's going to happen with my kid? Because I may just decide that I am not living forever. I may not be an eternal. I'm still out. I'm not sure. I might be, but we're going to figure that out. So just hang loose. I'm going to shut the recording off. And if you have any other questions for Joel, then like Vonda, I think you still had one in the chat we didn't get to. Thank you so much. If you have to leave, please take the quick feedback form. Thank you so much for being here.